After taking a short breather the month before, the stock market continued its rally in May, with globally diversified ETFs reaching new all-time highs on a few occasions. Since most of us are investing in regular, usually monthly intervals, today I want to spend some time talking about the best and worst days to buy ETFs each month, based on historical data. Not only that, the ECB has its next meeting Thursday, so we could see the first cut in interest rates in the Eurozone soon. What does this mean for Euro savings accounts and money market funds? We'll discuss all of that while taking a closer look at how each of my investments in ETFs, P2P Lending and crypto performed in May, and any important events up to today, June 5th, 2024. Let's start with stocks in the form of ETFs, the largest portion of the investment portfolio I share with my wife. After taking a short breather in April, where it dropped by a few percentage points, our main ETF, the Vanguard FTSE World, continued its rally with a May performance of plus 2.74% and impressive year-to-date returns of 10.73%. Looking at our portfolio in actual numbers, we're up about 32,300 euros so far in 2024. My wife and I started investing in low-cost ETFs back in 2017, and we simply kept buying more shares on a monthly basis, especially as our income grew over the years, no matter what was going on at the time or what the markets were doing. Looking back, I'm really glad we let none of the noise from scary news headlines or useless forecasts influence our investment decisions. Our average return since then stands at 10.46% per year right now, above the average return of 7% per year I like to calculate with long term with a globally diversified ETF portfolio. So you definitely won't hear me complaining anytime soon. Anyway, as you can probably tell by now, I'm a big proponent of investing a portion of your monthly savings into the market on an ongoing regular basis, no matter what prices are doing at the time. Which brings us to the first topic I wanted to discuss with you today, the best day to buy ETFs each month. Every once in a while you hear someone mention that day X each month is the best time to invest to get the lowest possible average price. I also spent way too much time thinking about that in the past. Should I invest as soon as the month starts, sometime in the middle, or towards the end of it? The thing is, if there was a notable difference, it would quickly be taken advantage of by other market participants and arbitraged out. There is one analysis by German data analyst Jan Taubitz though, which I'd like to look at with you. He simulated daily recurring investments for these 10 ETFs, which included S&P 500, MSCI World or All Country World, for a period of 10 years from September 2012 to August 2022. And here's what he found. On average, investing during the first 4 to 6 days of the month yielded the best returns, while the last 5 days were the worst in comparison. And here's what it looked like for each of the ETFs individually. For global investors like myself, we can see that the best days to buy the All Country World, the counterpart of the FTSE World, and the MSCI World were at the start of each month. Okay, but over how much of a difference in returns are we really talking about here for investors that always purchase their ETF shares on the worst day each month instead of the best one? About minus 1.8% with the MSCI All Country World, minus 2% with the MSCI World, close to minus 3% with the S&P 500, and up to minus 4.4% with the Nasdaq 100 ETF, since that's a lot more volatile. Now, before you draw any conclusions from this, you're missing a key detail. This return difference is not per year, it's in total over the entire 10-year period that was analyzed. But there was still a small difference nonetheless, and an extra 2% on, let's say, a 200,000 euro portfolio is 4,000 euros, so it's nothing to sneeze at, even if that's in total over a period of 10 years. Taking a step back, it's actually pretty simple. Since an ETF covering the global stock market has a positive expected long-term return of 7% per year on average, the sooner your money is invested, the better your returns historically. So investing your money as soon as you receive your paycheck tends to yield the best results compared to waiting. It doesn't matter if that's at the start of the month, the middle, or the end. When looking at the analysis we just discussed, you might assume that the last days of the month are a bad time to invest. They're not. They're simply worse compared to investing the money earlier, which is only worth thinking about if that money was already available to you at that point. Investing in the middle or end of the month still yields better returns on average compared to waiting for the start of the following month, since the market trends upwards over time and time in the market beats timing the market. This is of course assuming your trading fees are the same no matter when you buy. What this means for my wife and I is that we have an automated recurring investment into the Vanguard FTSE World running at the start of each month, since that works well with her monthly paycheck as an employee, while I am self-employed, so I invest additional money whenever I get paid, no matter the day of the month. Here's how you can automate your investments in ETFs to make this a bit easier. On Interactive Brokers, just set up a recurring investment and choose the exact date you want your money to be invested each month. Ideally, right after you get paid and you wire money to your brokerage account. Just make sure you switch switch to tiered pricing first so that you pay the lowest fee of only €1.25 up to a recurring investment amount of €2,500. Meanwhile, on Trade Republic, you can set up a savings plan, which is what they call recurring investments here, and choose if you want your money to be invested on the 2nd or 17th each month. In this case, the investment is commission-free, which is great, especially if you're investing smaller amounts right now. By the way, you can find the links to both brokers in the description below, which is a fantastic way to support me if you'd like to. And don't forget to subscribe while you're there if you haven't already. Speaking of Trade Republic, we earned a record €71.87 in interest on our cash reserves here in May, which are secured by a €100,000 bank deposit guarantee and come with a 4% interest rate. Not only that, since we've been using their card for all of our shared monthly expenses, we managed to get an extra €15 in Saveback, which we also invested into our ETF. Now, this ties in well with the second thing I wanted to talk about. We may see the first interest rate cut in the coming days in the Eurozone. Due to inflation dropping back to somewhat reasonable levels in most Euro countries, the ECB is planning to start lowering rates again, most likely from 4% to 3.75% per year. If this happens, here's what this means for savings accounts and money market funds. Based on what I was able to find out from Trade Republic, they're planning to continue passing on the ECB rate 1-to-1, so in case of a first rate cut, we'll still be earning 3.75% per year on our euros here. And money market funds like Xeon, the popular Euro overnight rate ETF, will also start yielding close to 3.75% per year in this scenario. So it's nothing worth worrying about, but it may mean that we're slowly moving out of the current high interest rate environment with all of its pros and cons. Okay, let's move on to my investments in peer-to-peer lending. In May, I earned a total of €365.56 in interest on the 7 platforms I'm investing on, making this one of my best months ever. Here's how my money is currently distributed among them in percentage terms. Now let's take a quick look at each platform one by one and see if there were any important events, starting with my largest one, Mintos. With close to €92 in interest, May was my best month in 3+ years. I was also happy to see that my overdue payments dropped by €172. Mintos added rental properties as an investment option last month, which might be worth looking at for a bit of extra diversification. Surprisingly, the 2 that were offered so far are located in Austria, my home country, but with yields of 5% per year plus an expected capital appreciation of 3% per year, I don't find them that interesting personally. In fact, I would probably look for a diversified REIT and real estate stocks ETF instead, if I wanted more exposure to real estate, but that's just my personal preference. Next up is Esketit, which had a solid month, Via Invest, which did very well with €63 in earnings and 0 cash drag, Income Marketplace, which also performed as expected, and the same was true for RoboCash. Meanwhile, another one of my agricultural loans was fully repaid on Lande, but my monthly interest payments were still a bit below expectations. And lastly, Debitum had another good month with almost €35 in interest payments and no delays. Both Lande and Debitum are running bonus campaigns in June. You can look at the details using the links below if you're interested. I don't want to waste your time going over the specifics here. I hope it's okay that I kept this part a bit shorter this time. It's just that my other investments are a lot more exciting compared to what's happening in the peer-to-peer lending space right now. That could of course change in the future. Alright, now let's have a look at the portion of my portfolio that carries the highest risk by far, my small speculative allocation to the 2 largest crypto assets, Bitcoin and Ethereum. I never expected this to happen so soon, but in a surprise turn of events, the SEC approved Ethereum ETFs in the US less than 6 months after they gave the green light for Bitcoin. While I don't think it will have as much of an effect on price as the Bitcoin ETFs had, I still think it's very bullish for the sector. As for my investment returns, Bitcoin was up 14.52% in May for a 2024 return of 62.59% so far, and Ethereum was up 26% in May due to the ETF news, with a year-to-date return of 69% so far, which means they're still my best performing investments in 2024 by far. And I personally do expect these to do very well over the rest of the year as well. Having said that, I'm fully aware that these are highly speculative and carry a ton of risk. Just look at how much prices have moved up or down on a quarterly basis in the past. As a result, I try to limit them to a small part of my portfolio, and I'll do some rebalancing with my other investments by the end of the year. And you should likely do the same in case you decide to add a small exposure to your portfolio, for example via a regulated broker like Trade Republic or a dedicated crypto exchange like Bitvavo. But don't let anyone tell you absolutely need to have Bitcoin or other crypto in your portfolio. You don't. In fact, while in my opinion every long-term investor can benefit from holding low-cost broad-based ETFs, it's really personal preference if you want to mix in a bit of peer-to-peer lending for some extra cash flow and diversification, as well as Bitcoin as a high-risk bet and uncorrelated hedge. There's a reason why my wife and I invest 80% of our money in ETFs, and why that's the main pillar of our early retirement strategy. Based on historical data, it's simply the most likely to yield good returns long-term And so far after 7 years, that has certainly been true. And as you found out earlier in the video, obsessing over the perfect day to buy ETF shares is a waste of time. Just buy them as soon as you have cash you want to invest or the next closest date your broker offers recurring investments for. But now I want to hear from you guys. Do you have a fixed date each month when you buy ETFs? And are you using an automated recurring investment or are you buying them manually? I'd love to know in the comments. Before you take off, don't forget to gently tap the like button if you enjoyed the video and to subscribe if you haven't yet. If you'd like to support me, feel free to use my links in the description below to anything that I mentioned. And of course, none of what I talked about today was meant as investment advice. I'm just sharing my personal opinion based on my own experience as an investor. Thank you guys so much for watching, have a wonderful day, and until next time.